What is going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So I wrote down 3 dividend stocks that you guys wanted me to do a dividend analysis and stock analysis on. I'll go over the trends and I'll review these stocks. Some of them I like, some of them I'm like, ooh. So we'll go over that. So again, if you're new, you got to hit that notification bell so you don't miss future videos. Smash that like button. Let's check these stocks out right now. We have the first stock is a mortgage-backed real estate investment trust, Chimera Investment Corporation, sitting at 1138. Has a previous close of 1162. It looks like it's not doing too hot against the S&P right now. Its year range is 1130 to 1685. Market cap is 2.70 billion US dollars. Its volume is 1.95 million. PE ratio is 4.67, and the dividend yield is 11.59%. So let's check out these guys as a company. Internally managed real estate investment trust was founded in 2007, headquartered in NYC. Our primary investment focus is on residential mortgage loans, asset securities, and mortgage-related securities. So a few things about these guys. Here's their dividends since inception. So 2014, it looks pretty good. But the thing is, we need to look inside the nitty and gritty. We know that they're a mortgage-backed real estate investment trust, MREIT. Big thing with MREIT is how are they doing revenue-wise? How are they doing dividend trend-wise? So let's check these guys out. So revenue-wise, 2015, 872, 2016, 934, 2017, 1,138, 2018, 1,273, 2019, 1,361, 2020, can blame the pandemic, 1030, and 2021, 937. So a few things that have me watching closely is the 2016 to 2019, there was an increase in revenue. So let's check out their dividend history. Right here we see 2013, it was 9 cents. 2014, 15, 48 cents. Then it hit 50 cents. Then it hit 30 cents. And then it hit 33 cents. So it is down. That's one thing that's a positive. It's down. It has 11.1% yield. Annual dividend is 132. The PE ratio is 4.66. Now, FFO is important with regarding real estate investment trust. So this is one thing that I noticed. The trends are going up over time. So that's popular. The revenue appears to be going up. Now, these guys took a huge nosedive during the pandemic. A lot of people capitalized on real MREITs that took a dip. NLY, AGNC, a lot of those, and people are banking on it. Now, I'll give you kudos. If you bought the dip in AGNC or NLY, I know I'm not a fan of those. Why would you sell it? I mean, you got it at a really big and good discount when the pandemic hit. That's another one that I can see people capitalizing on. And you're seeing the dividend hikes. So it is down at 1139. So a little bit more, we're going to dig into these guys. So the fiscal year, I mean, there was a dip. We just need to see how things are going in the next year. But the one thing that is attractive is it's hit hard. It was hit hard. And if you park it and leave it, there may be potential. Again, I'm not giving financial advice for entertainment purposes, only disclaimer in the description. But look at the fiscal quarters. There is a little bit of a drop, but big deal. The revenue has gone up. Okay. June, September, it's gone up. December, okay, you can blame pandemic. It's going up. So there is a trend of increasing revenue. So it's going to be on my radar. Definitely. I think this is, again, I don't like to give financial advice. I can't. And again, this is for entertainment purposes only. But the dividends are going up and the revenue is going up. This looks like an attractive dividend stock. Now, I prefer ABR over this one. But this one looks attractive as a mortgage-backed REIT. So I would say this is a good pick and nice catch on this as a dividend stock. The dividends are going up. Everybody took a hit during the pandemic. So there is, I mean, look at IVR. IVR took a huge hit. I'm taking a risk on IVR. This is one to keep an eye on because if I start seeing an increase in revenue and an increase in dividends, may buy it. So let's check out the next dividend stock. Next one is Starwood Property Trust, STWD. Previous close was 24.17. Day range was 23.81 to 24.13. Year range was 22.37 to 27.01. Market cap is 7.41 billion US dollars. The volume is 2.41. The PE ratio is 15.70, and the dividend yield is 8.02%. So let's check these guys out. They offer first mortgages, subordinate loans, mezzanine, bridge loans, and preferred equity. Starwood Property Trust possesses the size and scale to serve as a one-stop lender and seamlessly deliver more complex transactions to its clients with certainty of execution. So here's their mortgages and bridge loans. Here's the other loans. They're pretty transparent with their geography, US and Europe. Right here, loan to value ratio, property types, loan term, 3 to 5 years, recourse and interest rate. So they're pretty transparent. That's the one thing I like about these guys. Let's check out their revenue and their dividend history. Already in millions US dollars, this mortgage-backed real estate investment trust is pretty attractive. I mean, look at this. Revenue-wise, 702, 735, 784, 879, 1,109, 1,096, 1,036. You can blame the pandemic right here. So there is an increase in revenue, which makes these guys attractive. But let's study their dividend history. So 2013, it was 46 cents, 2014, 48 cents to 2022. So already, just looking at CIM is a little bit more attractive to me because it's cheaper and the dividend hikes have been there. I know these guys have increased in revenue, but they've been stuck at 48 cents for a long time. I don't know about you guys, but I like raises. I want dividend hikes. 7.3% annual dividend of 192, and it's sitting at 23.91. So 48 cents, and then looking at the previous mortgage-backed rate CIM, it hit 50 cents, and it was increasing. So it's just stuck. So that's one thing that's kind of a turnoff is it's just stuck, and I don't see any dividend hikes. I mean, Arbor Realty Trust is a mortgage-backed REIT that's cheaper, and it's what 36, 37 or something with its dividend distribution. Its dividend hikes are going up there, and these guys are just not hiking. So if you want something that's kind of stagnant, you're not getting dividend hikes. I mean, go for this one, but I don't like this one. And again, CIM looks just more attractive to me. Just studying the dividend history and looking at the doing a dividend analysis on them. So let's jump to the final one, and this one I really like. This last one is Manulife Financial Corporation, sitting at 21.36 with a 4.84% dividend yield. PE ratio is 7.53. The volume is 4.55 million. Market cap is 41.38 billion. Its year range was 1766 to 2222. So you can tell right here the pandemic, it took a hit. Wow, 939. Imagine capitalizing on that. Day range was 2129 to 2148, and its previous close was 2147. So what are these guys about? All right, so I went on their website. It's just not as attractive reading it on the website, but Manulife Financial Corporation is a Canadian multinational insurance company and financial services provider headquartered in Toronto. The company operates in Canada and Asia as Manulife and the United States primarily through the John Hancock Financial Division. So how are they doing revenue-wise, and how are they doing dividend history-wise? Already you're seeing in millions US dollars, these guys are making a killing in revenue. 26,979, 40,000, 44,000. It took a little bit of a hit at 30,000. Then it jumped to 59,000, then 58, and then 49. You can blame the pandemic, but big deal. These guys are generating a ton of money revenue-wise, and they're big. They're a big company. Now let's check out their dividend history. Look at these hikes over time. 2013, 13 cents, then it was 15, then it was 17, and then you got one that hit 13, big deal, 13, 11, 14. Then it goes to 16, and then you start seeing them generating a ton of cash. 17 cents, then 19 cents, and 18, then 19, then 21, then 20, then 21, then 26. So it's kind of like a scatter bomb, but look at this, 21.37, 4.85% dividend yield, annual dividend of 103, but 26 cents in 2022 versus 13 cents in 2014. So you are getting significant dividend hikes. Let me know what you think of this video. If you are new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. This is Darth Dividend. You guys have a good one. Which one do you like? I like MFC number 1, CIM number 2, and then Starwood number 3. Let me know what you guys think in the comment section. You guys take care and have a great day.